Employers, I'm Mike Krupa, and today I want to discuss one of the most misunderstood numbers in health insurance today, the fully insured loss ratio. See, most brokers are taking 12 months of paid claims divided by premium, and they think that can use that information to be able to predict or justify what your actual renewal is going to be. But that's not how the carriers are actually underwriting your plans. It's not even close. Now, I've sat on the actuarial side and I understand how the carriers are pricing your plans. Paid claims, they're only telling part of the story. So when brokers are relying only on paid claims to justify or predict your renewal, they could be wildly under or overestimating what your actual renewal is going to be. And now this is one reason employers get surprised every single year with these high increases. Now, in the remodel benefits process, the first step is control. And control starts with analyzing the data the same way the carrier does, at least in a fully insured environment. And when you do that, you can more accurately predict what your renewal is going to be months ahead of time. So let me walk you through an example of this. So let's walk through an actual example of the before and after. And this is a prospective employer I'm working with. One of my deliverables to them was to give them an idea of where I thought their renewal was going to be for 26, so we could start planning for the next few years. And so they provided me with some key data, particularly their Blue Insight monthly financial report, available to all Blue Cross of Illinois customers that have at least 50 employees enrolled on their health insurance plan. And I went straight to the financial overview, medical and RX loss ratio report. And from there, I pulled 12 months of premium and I pulled 12 months of paid claims. Now, this is typically where it stops for brokers. They look at the loss ratio, which is just paid claims over premium. In this case, it's 114%. Now, I would equate that to an approximate 24% renewal based on some other Blue Cross Blue Shield assumptions. So let's just look at that. Now, this is what's kind of in the report. I've pulled some additional information. We do have high cost claim information. Particularly, I want to know what's over $50,000 because that's where Blue Cross is going to purchase their own stop loss protection, which they call a pooling charge. That is not in the Blue Insight report, but our claims over $50,000, we can get to that. The other piece that's not is another fixed cost, which is HMO capitations if you have an HMO plan. So some key items we're going to talk through here. So let's talk about what it looks like after we make adjustments. So paid claims, still that $1.498 million. But now what I need to do is I actually need to subtract the claims that were over $50,000. In this case, $217,000 gets me to a net paid claim number of $1.28 million. Now, I can't stop there because I also have to account for what Blue Cross is going to charge back in their underwriting calculation, a pooling charge to cover these claims, $394,000, and HMO capitations about $39,000. So when you make all these adjustments, net paid claims, plus your pooling, plus your HMO capitations, you're at total payments of $1.7 million. And when I do a revised loss ratio here of this divided by that premium again, I get closer to 130% loss ratio. To me, now I'm projecting an approximate 40% renewal. So 24 to 40, you can see the difference here. And believe it or not, I've seen renewals that would indicate, call it a flat renewal, but should be actually getting a 30% renewal or vice versa. You gotta make these different adjustments in the calculation if you truly wanna understand what your upcoming renewal would look like. So that's the difference. The loss ratio that's in your reporting and the loss ratio that the carriers are actually pricing your plans off of. And once you do all of these different calculations, you can now more accurately predict what your renewal is going to be. This is the core to the control step in the remodel benefits process. Understanding your data and understanding what happens after. And this is all done because what we want to be able to provide is a renewal projection 6 months ahead of your actual renewal so you have more time to plan, educate yourself on the different plan options that are out there in the marketplace. So when you finally get your renewal, you're not reacting. You got a plan in place. If you want to stop being blindsided at your renewal and actually understand your numbers, that's exactly what I do. Contact me if you want to explore a remodeled approach. Thanks for listening.